Alex Cham. I'm based out of our Langley, BC office, and I'm the Regional Wealth Leader for Western Canada. With us here today is my two colleagues, Graeme Allen, who is the Regional Wealth Leader for the East, and also Vic Raye, who you also hear from today, who is the National Director of Banking Services. Our team is led by Jason Payne out of the Maritimes, and Jason is, of course, the head of wealth and banking. So we're very delighted to be here today to bring to you a couple of presentations, and so let's get started. Now, what I thought I would do today is actually profiled with the advisors on the call today a few case studies just to kind of bring to you something different. We've always said at IDC Worldsource, because we get to work closely with the advisors, we kind of see what they're doing and we know what's successful, what's working, what's not working. So today I'm going to bring to you a couple case studies. And if there's any questions, just type them into the chat, and we can handle them, a little bit later. And once again, just want to thank everybody for joining us today, and of course, thank you for your business and your continued support. So here we go, 2 case studies from wealth to par, and you see what I mean when I use that title. So these case studies I'm going to talk about is actually from one of our advisory groups, West Group Financial Management Inc. And I would like to introduce them and talk about the 2 case studies that we all worked on. Now, West Group is founded by 2 owners and partners, Karm Panesar and Bal Kundan. And they are the owners and founders of West Group Financial Management. Believe it or not, they only entered the business and joined IDC Worldsource only about 4 years ago. So these are relatively new advisors that have joined us just very recently. Both Bal and Karm are President's Conference qualifiers. And this is actually the life insurance business, financial services is the second career for both of them. Karm was the owner of an excavating company and a real estate developer, and also an accountant. And his partner, Bal, was a university professor, IT consultant, and a real estate developer. So again, a lot of business and academic background from both of them. Now, in the short time that they have been in the business, by the end of 2022, they had a 5-year goal to reach 50 million of assets under management. And again, that is the goal that they're going to achieve quite easily. And most of this business is actually done in the last 3 years, because the first year they were doing a lot of planning, organizing, hiring their staff, recruiting, building out their office, and implementing other infrastructure. So their target market, high net worth executives, incorporated professionals, and small business owners. On staff, they actually have a full-time CFA. They've also got a CPA on staff. They have 3 full-time admin and marketing assistants, support staff, and they also have 16 advisors in their producer group. Now, their approach with clients is very comprehensive financial, retirement, and estate planning. And they integrate a lot of this with their in-house accounting services, mortgage brokering, and other legal and accounting professionals. and they're always focused on the client's goals and objectives. So it's all goals and objective based, the planning that Carm and Val do. They're located in South Surrey, BC, and they're licensed in BC, Alberta, Saskatchewan, and Ontario. And today they were good enough to share with us 2 cases that we call From Wealth to Par. Now, the first case study, this is not his real name. We want to protect the innocent, Mr. D. Devi. Mr. D. Devi and his spouse are friends of Val and Carm and are land investors and real estate developers. His wife is a dentist and runs a very large successful practice. And discussions with Mr. Devi's accountant commences on the onset after the initial approach to discuss the process of comprehensive financial, retirement, and estate planning. Again, integrating it with all their services, in-house professionals to reach their financial goals and objectives. They have a holdco structure that owns everything, like it owns the land, their real estate, dental practice, and it has huge trapped corporate surplus. They were existing clients of IA and TD Private Wealth. But what Val and Carm uncovered that the client was never, they never completed, nor were they offered any type of tax or estate planning. All discussions at these private wealth firms were focused solely on investment returns. And all investments were held in the holdco with little or no long-term planning, whether it be personal or corporate. Mr. Devi was very interested in the transition of family wealth to the next 2 generations. And that's why he started the conversations with Val and Carm. Now, as a conservative investor, he was very interested in the guarantees of SEG funds, especially the 100% upon death, paid in a very short order without being contested. And he literally embraced every aspect of SEG funds, of segregated funds role in estate planning, and of course, the ability to bypass probate with privacy and cost savings. The client has young children, and also the children were never brought into the picture from IA and TD Private Wealth. And they were never shown how to utilize an informal in-trust account for SEG funds to protect the child's wealth and to simplify taxation. And also, par whole life was never talked about with the kids either. And again, they brought up par benefits for their children. So after a lot of consultation and discussion, Mr. Devi says to Val and Carm, okay, I'll throw you a bone. Here's 500K, show me what you can do. And sometimes this does happen in business, especially with affluent clients. They want to test the waters out. So they said, okay, here's 500,000, West Group, show me the money. So with the assistance of their in-house CFA, a SEG fund portfolio was designed. Now, this is actually their IPS or investment policy statement with SEG fund portfolios. They want to have maximum growth, a target goal of beating the indexes, but with smoother returns, limited volatilities, and of course, guarantees inherent with SEG funds. So again, this is their investment policy statement that they have with all clients. So over the next year, the 500,000 that Mr. Devi invests with Val and Carm grows to 600,000. So of course, they've done a great job. So the client, convinced of superior planning strategies, client service from the support staff, smoother returns, over the course of the next 2 years, the client invests another $8 million. We had involvement in this case from IDC Worldsource Tax and Estate. The life insurance companies, tax and estate teams were involved in this. Business development executive here in BC, Gurbinder Amar, and of course myself involved in this case from inception. This client has also been very keen about implementing the corporate borrow to invest strategy, and that is a strategy that that Bal and Carm got Mr. Devi involved in as well. And a wealth to par strategy is currently being implemented for this client, and he's going to be depositing $1 million into par whole life over the next 10 years. And the main concern now is the par is generating too much death benefit. So it's something that they're going to have to deal with, but the IRR, the internal rates of return on that $1 million over the next 10 years is looking really good and is excellent. And after each meeting, actually more and more wealth is uncovered. The total net worth of these clients is still not exactly known. And again, more is uncovered, every time after every meeting. And in this case, the total SEG fund and par compensation on this case will slightly exceed $1 million. And again, it all started, on the wealth side of the business. And I'll bring to you the second case study, Mr. A. Miller, ABC Corp. West Group first met Mr. Miller and his spouse, both entrepreneurs, about 15 years ago. And they had a previous business relationship. And then it was one of those clients, Bal and Carm told me he knows about a dozen life insurance agents, but of course he knew Bal and Carm, so he approached West Group and say, I need $6 million of term life insurance. That's it. That's all I need. I need $6 million. And from there, it went to, okay, now I need 16 million of T100 life insurance. So some advisors would just write up the case and deal with it later. But Bal and Carm, rather than just write up the case, they said, you know what, come into the office, let's do some planning. So we got Mr. Miller and his wife to come in, do some comprehensive financial retirement and estate planning. They integrated the services with the other professionals in their office, and all their plans are goals and objective based and also tax efficient as well. So basically they said to Mr. Miller, come in, meet the team, let's do some planning, and then we'll tell you if the 16 million T100 is good for you. So the existing investment portfolio was reviewed, and it comprised of many conservative stocks. There was very little rebalancing done, and it was typically a buy and hold with little focus on the goals of Mr. Miller or the objectives for the money. So of course, they brought up discussion on the 10 advantage of segregated funds. Again, this client is very conservative when it comes to investing because all his equity is plowed into his business. He liked the guarantees, especially 100% upon death. That was very key to him. Privacy was also key because he comes from, or he has a blended family. He was married, had kids from another marriage. And potential creditor protection really resonated with him because he is a business owner. And again, he just wanted to simplify his estate with segregated funds. Client was also educated in the passive income rules, and an estate plan was put into motion for Mr. Miller with a referral to their lawyer to structure trusts for control of corporate assets and the transition to personal at a later date. And over the course of the next year, the client invests about $3.5 million into segregated funds with the portfolio design and recommendation from the in-house CFA. The client and his wife was also very keen for the corporate borrow to invest strategy. So they end up investing $4.5 million into segregated funds. And based on the passive income rules within the client's companies, West Group also proposed depositing $800,000 per year into a corporate par strategy for the client and spouse. And after a lot of review, Mr. Miller and his accountant discusses the situation in depth and all the proposal and comes back and says, well, wait a minute. What if we need that corporate cash for business expansion? Well, based on their excellent, strong cash flow, strong credit, risk tolerance, and IFA was brought up for discussion with Mr. Miller by Bal and Carm. The accountant, who had a past relationship with Carm as a former accountant, and again, the accountant was brought into discussion from day one, and he approved the recommendation, and the accountant really liked the IFA strategy. And again, they brought the accountant in early, and the accountant was at every meeting, every presentation along the way, so there were no surprises. Once again, IDC Worldsource tax and estate team was consulted for the par solution. The life insurance company tax and estate was consulted. The business development executive, regional wealth leader, again, many people involved in the case from inception. And the case was recently approved for $220,000 first year commissions. And total compensation on this case with the SEG funds and the par strategy, $928,000. So again, a really strong case. Now, really, what these two cases I wanted to show everybody on the call today is to give a summary of them, but also the observations that that came to mind as I was working on these, as we were working on these cases. And it's always been very well known in the financial services industry. If you control the cash, so you control the wealth, you also control the funding for the life insurance strategies. And this is what we refer to as from wealth to par. Back in the day on the IROC side, stockbrokers today, they're very successful as well in implementing permanent insurance par or par strategies simply because they control the cash and they really show the clients how to deploy the cash into a separate asset class. One of our top advisors in Canada, he actually utilizes high interest accounts, Manulife Advantage accounts, to park the cash or to accumulate the cash. That way he has control of the cash to implement into life insurance strategies. So whether it be high interest accounts, managed seg fund portfolios, if you can control the cash, it is easier to make the recommendation for the insurance strategies. Again, always take the time to review the 10 unique features of seg funds, because you will never know what is the hot spot or what's most important to the client that is in front of you. So don't miss any of them, don't glance them over or just talk about what you feel is important about seg funds. Review them all and you'll be surprised what clients let you know that they're most interested in. Corporate borrow to invest strategy. We did a presentation on this. Anyone having more questions on this, reach out to Graeme or myself or Vic, and we can talk about it some more. Again, due to substantial retained earnings, it's a great strategy. Again, you can show them how to magnify wealth to the next generation using par whole life. And usually, believe it or not, these high net worth clients are not a big fan of CRA. And I know some advisors out there, they say, okay, you got to pay these premiums to the insurance company, or you got to pay tax to CRA. And they basically say, well, who do you hate more, CRA or the life insurance company? And oftentimes you'll find out they're not a big fan of the CRA. And typically these high net worth clients that we all work with, they're already wealthy, and oftentimes they have more money than they can spend in their lifetime. So the question you can pose these clients is, what portion of your cash, your investments, or your net worth will you never spend? Is it 10%, 15%, 25%? Whatever their answer is, these are the funds that you can earmark for SEG funds or par whole life permanent insurance without any question. And I know many advisors have adopted that question and use it successfully in their practice. Again, par whole life can create another very stable asset class for clients today, but it will also magnify the returns for personal or corporate retirement programs, or as a personal or corporate estate bond later. So again, many uses for permanent par whole life. Again, observation from these two cases and how Bell and Carmen West Group operate their practice. Again, it's more the counselor selling style to educate their clients on financial, estate, and retirement planning. Again, showing them the numbers. Numbers are always important. Working with their professional advisors from day one, such as CPAs and lawyers. And of course, you can see from these two case studies and other cases that they work on, they leverage off previous relationships from any former businesses, former employment, or friendships. So again, reaching out to their natural market, and they've done well in this market in the last 4 years. And again, work closely with your business development executive for everybody across Canada. Your RVPs are a great resource as well. The wealth leaders like Graeme and myself, director of banking like Vic Raye, because we see what's going on out there every day. We work closely with the advisors, so we see, what is working out there. And this is my last slide. Many of you have seen it before. I designed a slide years ago. I call it segregated funds, the power of 10. And really these 10 unique features of seg funds really prevailed in both of these case studies. And I know these 10 unique characteristics of seg funds, work on, so many cases. Again, the guarantees privacy protection, cost savings, controlled, simplified tax, time, avoiding traps and pitfalls, flexibility, and of course, planning strategies. And Graeme and myself, we'd be more than happy to go through more of these features with anybody. And we have a presentation on this as well. So again, I think I just finished right on time. Sorry, I had a lot of material to go through. Again, Vic or Graeme, if there's any questions, I can handle them now. But if not, I would like to pass the stage over to Vic Raye, our National Director of Banking Services. And after Vic, Graeme is going to conclude the meeting and summarize some of the tools that we have on Win Big and provide a few comments as well. So over to you, Vic.
Well, thank you very much, Alex. Graeme, were there any questions that you wanted to handle? Maybe one or two quickly or not?
Let's get your presentation
All
done,
right.
Vic, because I know there's some really good information there, and at the end of the call, we'll address a couple of questions that have come up.
All right, very good then. I will get started then. Hi, everyone. Vic Raye, National Director, Banking Services. It's a pleasure to be in the batting order today, and that's a little out of season. I know it's NFL season actually, so great to be in the playoff picture here for you at RRSP time. And we have a nice recap of the market and some sales ideas regarding RRSP loans. And I'd like to begin with just a quick recap of some of the key points regarding the market. So in terms of the RRSP borrowing sources that are available to your clients, of course, there are RRSP loans, but let's not forget about any personal lending facilities, credit facilities that the client may have in place, which can be a lower rate home equity line of credit, such as a BMO Ready line or a Manulife Bank Manulife One. Those, of course, would have the lowest rate. It's hard to beat residential real estate as collateral for securing the best possible rate. But many clients also have some higher rate non-mortgage or unsecured, perhaps even lines of credit that can also be used. So as part of your due diligence investigation, know your client process, hopefully you're uncovering what their debt instruments are and to what extent that they can be deployed for any plans that you have. One of the key things to remember about an RRSP loan, it's vital that the refund is used to pay back the borrowed funds. Otherwise, client could get into a situation where they're never ever going to be caught up and will always be a year behind. So the key is to really try to get them to pay that back, use the refund to pay that back as much as possible. And so just to build on that a little further, we basically see three sort of core loan strategies that are out there. There's the 1 to 2 year amortization standard type, 100% borrowed. If it's a one-time thing or maybe a couple of years, no problem. If it's recurring, that could suggest there's some kind of a deeper cash flow issue. We don't want to put the client in a position where, again, they're always having to combat a balance that they have to pay off before they can start the current year's contribution. So ideally, the second scenario is the one that we want to try and shoot for here, where again, it's a standard 1 to 2 year amortization, but it would be a top up. And the example I like to use is a $5,000 personal contribution with a $5,000 loan. Total $10,000 goes in, and at a 40% marginal tax bracket, you're looking at a $4,000 refund, which again would go to pay off the $5,000 loan, leaving only a $1,000 balance. Now there is a formula, and I'd like to recognize Manulife Bank for that. They are the ones that have a whole piece on this strategy, actually. There is a formula so that you can calculate what that amount should be exactly to pay off the refund. So it's $5,000 times, again, the marginal tax rate divided, so the $4,000 divided by the 1 minus the marginal tax rate, or in this case, 60%, and that'll equal $3,333, and that would make the total contribution $8,333. So that's the exact contribution to pay off, to use the refund to pay off the loan in full. And then the last strategy is a very interesting one. It tends to be few and far between, but a very interesting market. It kind of ties into Alex's comments earlier, which is a catch-up. So quite often business owners, we see this happening, or professionals, if it's dentist or doctor starting off in practice, perhaps they've got lots of expenses that they're incurring. But it's a great way to catch up and get in front of some of the business owners out there who have perhaps put their RRSP on a back burner. And so in some cases, you can go up to $250,000, as is the case with Manulife Bank in terms of a catch-up loan. And the amortization periods, of course, are longer to reflect that, up to 10 years. So those are the three main strategies that we do see. There are two clear markets. Younger clients, so we're looking here mainly at individuals who are keen to do a top up as described just now, or to take advantage of the home buyers program. This can often be tied into the first bank loan. This will often be the first bank loan for many of these clients, and in some cases, we're talking now the grandchildren of some of your elderly clients. So we're not talking so much here about the grown adult children of some of your elderly clients. We're talking about the grandkids now. So it's a great way to connect to the generation after the next generation. And so we want to make sure that we keep that family together as much as we can with you being the common connection in terms of being able to manage the inheritances and so forth all the way through the generations. And the RRSP tends to be a very good product to be able to do that, because it is one of the top reasons that Canadians do go to their banks for, is the RRSP loan. And then, of course, the other key market is the 45 and over, which tends to be more of an investment-driven, again, catch-up market. So I wanted to recap this for you. We see a lot of advisors dabbling in the RRSP loan market. You know, there's two schools of thought here. One is that the big banks are never going to go away. They're always going to be here. And of course, that's true. And so, you know, the fear that perhaps a client's going to walk into a branch or approach a big bank about something, you know, we can't let that rule our lives. And I know many of the successful advisors don't let that stop them. They provide a huge service, not threatened at all by the big banks. However, on the other hand, you know, we do have the concept of mitigation. You know, why not try to stop that from happening as much as possible? Lending in particular is interesting in that it is very consumer oriented. My final point on this slide will be, there is no doubt in my mind that if one of your clients thought of making an RRSP investment, that they would absolutely think of you first. But if you were to ask that the same segment of those clients, you know, 10 of them, let's say, where would you go for an RRSP loan? Just based on my own personal experience of talking with advisors, I'm not sure they would all instantly pick you as their advisor to do the loan. They might be tempted to go to the bank just because they're conditioned to do that. So I wanted to share that overview of the RRSP loan market with you. This might also be a good time just to talk a little bit about TFSA loans. One thing I wanted to mention, although it's not exactly related to RRSP, to TFSA loans, is that TFSAs, unlike RRSPs, they can be used as collateral for other loans, whereas RRSPs cannot. So that could come in handy at some point. But one thing to keep in mind with TFSAs is that, and by the way, the only, as you'll see in a moment, the only carrier provider who I'm aware of that provides them is B2B. But the key here with TFSA loans, and again, this could very much be a nice sale if it's a catch-up, is that many Canadians have not taken advantage of their limits. And this program has now been around since 2009. And so we're looking at a total of $81,500 for individuals who have not taken advantage of their TFSA limits year by year. So that could be a nice sale for someone, again, perhaps a small business owner who's been putting off both their RRSP and their TFSA, but is now doing well. Some of you may have seen this. One of the things that we've tried to do is give you tools that will at least give you a sense of what the big picture looks like, a starting point, just to get a quick snapshot of what the various banking services are. I've done a similar one to this for IFAs, and this is the RRSP and TFSA summary. This will be available. It is available on our banking webpage on the IDC WIN Advisor portal. And what we've simply done here is showing you who the main carriers are. So on the left, I'm not sure if you can see my cursor. I try not to move it too much during the presentation, but here you'll see Manulife Bank, B2B, which acts essentially as a back office for several other life carriers. National Bank, recent announcement actually that they will not be continuing on as a essentially white label provider for Canada Life. That'll continue until May of 2023, at which point something new will be used to replace them. And we'll wait to hear what that is from Canada Life. And then last but not least, IA, which has its own in-house program. You know, the rates, I've highlighted the main rates. There's quite a few, but you know, you're looking in many cases for a standard RRSP where the limit is, I believe it's $27,830 this year. Up to that point, you're looking at 2.95%. That seems to be a recurring rate. IA's posted rate is a bit higher, but they have a promo on right now with a 0.5 reduction. 0.5, 0.5% reduction, which will bring it down to that level. And again, just some comments here on the far right in terms of links, where you can go for contact information. And Manulife Bank, I would say, has by far the most robust list of tools available for you to leverage, to use for RRSP loans by far, although IA is very good as well. And I've attached the PDF there. When you see this, actually, this is just a screenshot, of course, but when you see it on our website, it'll all work for you. I just want to point out also while I'm here, as you can see under the accelerator program, these are the ones that I mentioned earlier that can be catch up and can get quite high. So here we have the Manulife Bank Accelerator Max, which goes up to 150,000. And as you can see, the rate jumps up to 4.95, prime plus 2.5. So you know, the individual who has found themselves in that position, you know, clearly will be at this point probably more of a high net worth person and will find it of value. I don't know how high your income would have to be, or I can imagine how high your income would have to be in order to do that as a single lump sum. So we're not talking about a very small number of people who would find it attractive to be able to deduct $150,000 in 1 year, but they are out there. And although it's not a market that we could focus on, I think that when you one of the benefits of getting into something like the RRSP loan strategy is that people will, again, on credit, they'll come to you on it because they're trained to do that. And if you let them know that it's a service that you provide. So maybe what we'll do now is move on a little bit more to some of the advisor strategy key points to help you build your volume and help clients think of you first to come to you for their credit needs as well as the underlying SEG investment. So there's 4 key factors that we believe are key to the RRSP and the TFSA loan decision. One, of course, would be just the overall level of interest rates and their expected future direction. So we've heard already that we can expect to hear from, as we've heard from both the Fed and the Bank of Canada, interest rates to begin increasing later this year. However, still very low. So that then ties into the investment strategy that perhaps you as an advisor very strongly believe in. This could very much be an investment-driven strategy. If it's in fact, though, now looking like we're, you know, at market highs with some sell-offs occurring, those ups and downs, are those normal ups and downs, or are they part of a larger correction? So this is where a dollar cost averaging in strategy may apply. But it's also, you know, once again, the advisors who do these things have very strong opinions on what the investment strategy should be at any point in time. So this is a very important factor in terms of how strongly you feel about where the markets are going and how to manage the risk of any future volatility. Third, and also, of course, these are all equally important, is the client. Financially and behaviorally, do they have the financial capacity? Do they have the behavioral mindset to be able to do any kind of investment lending, leveraged investing? And of course, you, the advisor, are a common link for all of these. Your views overlay on top of all of these in terms of what your preferences are in terms of where the RRSP loan or a TFSA or any kind of leverage fits in to a client's financial plan. The last few points I'd like to make focus on this slide, focus more on the client marketing that's out there. And there really is some superb tools out there to generate interest. There's superb sample client letters. We have a couple ourselves that we've put on our advisor banking webpage on the advisor portal of idcwin.ca. But the carriers also have fabulous tools here to get the word out. And again, I can't stress enough how credit is a consumer product. People are trained to go out and do their own banking. They open up their own bank accounts. They do their own loans. This is just a question of building client awareness on your part that this is something that you can provide them with. I'm a big fan of what Razer Plan has as well, which is they have calculators on their website, which I'll show you a couple of screenshots in a moment. They have a wide range of calculators that can be used throughout the year, actually, and you can actually embed them onto, for example, into your email signature. So for November, or to your website. So for November to February, they have a superb RRSP tool that you can put down there. And again, it's just designed, it's free, and it's designed to just help stimulate conversation and create awareness through all of your regular communications with clients. So you're not having to do anything special. You do it once and you leave it there for 4 or 5 months or 2 or 3 months. And for example, Manulife Bank, I have to say again, I'll reference them again. A tool that is superb that Alex mentioned is the Advantage account, in terms of being able to identify quickly and easily cash balances that can be deployed. The My Clients tool allows you to actually see bank account balances in the Advantage accounts that clients have for potential cash positions. And further to Alex's point, I can't say enough good things, and I will say actually a lot more about this at the kickoff call that I hope you'll attend, kickoff meetings that we are having that I hope you'll attend next week. Being able to access cash is a trait that all successful advisors have been able to master. And being able to control the cash, you actually have to have the cash. And so to be able to have those balances in those accounts, I think that is a marketing gift that allows you to be put down as listed as the advisor of record on an actual bank account. It's the only thing of its kind in Canada where you as an advisors are allowed to do that, to be an advisor of record on an actual operating bank account. And I think it's a very underutilized and untapped service that I encourage you to adapt into your practices as much as you can. This is the Razer Plan calculator, two separate shots here. The one on the left shows the RRSP loan financial calculator. The one on the right is just the steps on a separate section of their website to show you how to actually just embed that into your email signature or to your website. You can see there's other tools here that could apply RRSP versus non-RRSP, TFSA versus RRSP, RSP versus mortgage. I'm sure those of you who are working with Razer Plan know about this, but again, part of these calls is to be both, in my view, I think it helps to be technical and non-technical. And by non-technical, I mean building your sales volume. How can we help you on the front end generate more opportunities where you can then apply technical skills in terms of being able to come up with financial plans and solutions, RRSP loans if need be, to help your clients meet their goals. So this is, again, something that I want to highlight that we try to connect for you. This is the My Clients section on Manulife's advisor portal, used to be known as RepSource. So we link these things back for you to make it as easy as possible through our weekly WIN bulletin. If you look at the bottom, you'll see all the different carriers that are listed there. If you click on Manulife Bank, this is actually what you'll see. So we've got a list of things that most of which I've been actually referring to here, many of which I've referred to here, in terms of being able to access My Clients and how to be able to implement that into your practice. So just to finish off here in the few minutes we have left before we stop for Q&A, underwriting and applications for RRSP, TFSA loans, general guidelines are you want to have someone with a clean credit score, clean credit history, score generally 650 bare minimum, ideally a little higher in the 680 range. And I think I mentioned this on a call that we had late last year. It was more of a year-end call, do's and don'ts kind of thing. And one of the things I would mention is you want to start the loan process, I would say, in January. So you've got still a couple more weeks left. Early February, still good, but you need to have a plan B if the person is declined. There is such a strong volume of large volume of RRSP loans, and most of it's automated. So the credit bureau check, everything is just done automatically. Very rare does a set of human eyes or hands actually go through that process. It's just more sort of at the very end. And so if there is going to be a glitch, if there's an unpaid parking ticket, no matter how strong the client's case, in terms of having it done, if it's having paid it and if it's still on the credit bureau, it's going to potentially result in a decline. So these are just things that to keep in mind while you want to start early with an RRSP loan. And we have had little glitches like that happen, and I want to prepare them for you. Also, we'll usually be sending out some kind of a compliance operations update for you in the first week of February. I'll tie in that into our IDC WIN Big RRSP toolkit in a moment, but please watch for that. The cutoff is March 1 this year. And again, the limit for 2021 is $27,830. A lot of this will be covered off in that operations email. And I just also want to mention, for those of you who are on the call, who are duly licensed, my comments today are really designed to help those who are life licensed. And we know many of you are duly licensed, and so please check to make sure that you're doing things in a manner that's consistent with whatever the leverage policy is at your MFDA or IROC firm. I mentioned the IDC WIN RSP Toolbox and IDC WIN Big RRSP Toolbox, and so I just wanted to give you a sense of where that is and where you can go. Our team there, Lisa and Wendy, did a superb job putting this together very quickly. And I'm thrilled that we have this for you. It's so the first email that you may have seen this was the one I remember, was on January 4th. It was again in our weekly win, and it was in the Did You Know section. This is exactly what it looked like. And there is a link here. Again, I'll move my cursor down there so you can see it, that if you click on that, again, a screenshot here, so I won't be able to do it for you. But I've got a couple of screenshots. It'll take you to the next screen here. It's a little going to be hard to see, but my point here is that it's there, and I wanted you to get a sense of what it looks like. But you'll see here that if I zoom in, I hope you can see me zooming in, you'll see all the carriers here. Everything's been listed, and I hope this isn't messing up your screens at your end. It works great here on my end as I zoom in, and you can see all the firms that are here. We have separate links for the actual RRSP loan sections. If you clicked on, for example, the B2B RRSP loan section, you'll see the second screenshot that I have here on the right, which is the details on their program. I was actually blown away that this is all in one place. This is what technology is supposed to do for us and for you. So I think that brings me to the end of my section. Thank you for partnering with us. And we'll be happy to now stop for any questions that you may have. And if you wish to discuss your banking strategy, by the way, for your practice overall, please reach out to me, and there is my contact information for you. So thank you very much.
Vic, that was great. Alex, perfect as well. I know one of the challenges we have as a team in dealing with the wider range of advisors that we work with is to provide relevant information that's relevant to the work that they do. One of the questions that came in there on an anonymous basis was, why is Alex's presentation for such high-end type of clientele versus the kind of regular client that people deal with? And again, I think that's answered that. We've provided some information here to really cover all components of the work that you do with your clients. The idea for us is to bring relevant information that you're going to use in your daily duties. So maybe not everybody has land developers walking in their door to do work with them, but there could come that opportunity the next month or maybe the next year that you do uncover that type of client, or you're referred into that client, or your network, people change what they do, or even open up more business to you. I think that was one of the things that came out of Alex's presentation there. There's with the discussion, with engaging the client and opening up their needs. Further needs came as a result of that communication. So we can't just say it's a high net worth case and that's it. There's probably many people in all the books of business that you work with have a lot more potential once the information is actually received from the data is gathered. A couple of things again on that the business development side. What's in this for you as an advisor? Why are we talking about RSPs? Why is it so important to engage on the banking side? Two figures here. For 2021, as Vic said, the RSP contribution limit is 27,830. Let's times that by 2, and that's a significant opportunity for revenue for one pair and a client. TFSAs, we may well be talking to business owners that don't have the RSP room, but you know something, there's a TFSA opportunity there. And as Vic said, there's an 81,500 for those people that have not actually done any contributions. Let's times that by 2, and there's another significant opportunity for one client set. So just right there, there's some real numbers that we're talking about to help you generate revenue. And again, we've engaged and client. We've given them a topic to discuss. We get a chance to communicate with those clients, and with the right communication, more opportunities going to come. It's a perfect time of the year to maybe get a chance to look at that client's group benefit booklet. What kind of RSP contributions do they have in there? Do they have something or do they not? If they don't, well, guess what? Let's get speaking to Vic and get some of those monthly pack plans sorted. Maybe there's some catch-up loan opportunities there. Just again, it's all about getting that business opportunity done. So that would be that. I took some great notes there from two of my colleagues that I speak with all the time. So it's always nice to learn something new as well.
Just wanted to thank everybody once again for being on the call today. Thank you for your business, and definitely reach out to Graeme, Vic, or Jason, or myself for any of your needs on wealth and banking.
Thank you very much as well, everyone. It was an honor to be here, and all the best wishes for 2022 for all of you and your families.